QuickBooks Enterprise 2021, Class Tracking, Responsibility Accounting, Balance Sheet by Class, Adjusting Entries. Get ready, it's time to boldly account where no accountant has accounted before with QuickBooks Enterprise 2021. Here we are in our Class Tracking, Responsibility Accounting practice file. We currently have the open windows open. You could open the open windows by going to the View dropdown, selecting the Open Windows list. We're going to be looking at the balance sheet by class. Now, in prior presentations, we've been putting together data, inputting that data, assigning classes to them, focusing primarily on the income statement or profit and loss by class, which will typically be the case most of the time for most uses of classes. However, it can be useful to see the balance sheet broken out by class as well. Balance sheet broken out by class will be something that will be included in QuickBooks Enterprise, not included in QuickBooks Pro. So we'll be focusing in on that now. Now note the balance sheet by class could need some adjustments for them or to it periodically, as we will see here, to allocate that out. Now the balance sheet by class also useful if we're doing something like allocating out like fixed assets and whatnot that we want to be allocating to different departments to be seen where those are located. The retained earnings will of course roll over by class as well. So let's open up the balance sheet by class. I'm going to go to the reports dropdown, company and financial, and we'll go on down to the balance sheet by class. Balance sheet by class only there if you're in QuickBooks Enterprise. They gave us a little warning. They're saying, hey, you might need an adjustment from time to time, 12/31/21, to adjust out the classes. So the balance sheet by class report shows the value of your company or organization by class. Use this advanced report if you want to see your balance sheet by fund, location, profit center, or other categories. So we're basically within here. So you may need to enter transactions in a specific way to ensure correctness. So I'm going to say OK. So notice what we have here is the same kind of breakout. We got a detailed balance sheet breaking out assets, liabilities, and equity into our classes we have set up. Now notice down below we have an unbalanced class here. The classes are not all lined up. They're not in balance. Assets are not equal in liabilities and equity, even though the total is lined up and equals out. Now why would that be the case? Because we did some adjusting entries to the classes on the income statement, which we didn't do to the balance sheet here. So we had, for example, transactions that were paid out of the checking account, the other side going to the sales or the payroll, and then we adjusted the payroll out from these service items into the subclasses in our prior presentation, leaving us with this total imbalance. But these items in the service items on the cash account that didn't get readjusted, and so we could have a similar situation with, like, say, accounts payable here, where we entered bills that resulted in expenses. We allocated the expenses out on the income statement, which rolled into basically the equity section here. It rolled into the equity section over here in net income, and there's no net income here. It didn't roll in because we took it out of net income and we put it into another category. So we could have these adjusting entries that would need to be done on the balance sheet. Now note that many times some companies might not be focusing so much on the balance sheet and may be perfectly fine with using the classes to further break out the income statement for their performance accounts and then have everything roll into a normal balance sheet. So if we were to have a normal balance sheet, we'd go to the reports dropdown, company and financial. Let's just take a look at a standard balance sheet for comparing and contrasting purposes. This will be as of 12/31/21. So here we have a standard balance sheet, everything rolling in there. We're not breaking it out by different department or profit center. In this case, everything on the income statement, which was broken out by class, now then rolls into the net income, and you have that clean balance sheet here. So it could be useful to break it out by class. If you don't, then everything, of course, will roll into a standard balance sheet. You also have the standard income statement as well that could be generated without classes. Let's take a look at the profit and loss by class, the one we've been focusing in on mainly. Reports dropdown, company and financial. We'll take a look at the profit and loss by class, changing the dates up top from 01/01/21 to 12/31/21. Here is our P&L, profit and loss by class. So we have our parent classes and our subclasses that we have set up. And then we closed out all of our information on these three categories, those being used for us to construct our data. And then we did adjusting entries to zero them out. So the bottom line is that 17,500 on the income statement. That then ties out to the balance sheet. It'll tie out to the standard balance sheet here, 17,500, no matter what the classes are. It'll tie out to the balance sheet by class as well in total. The total ties out, no problem with the total. That's just the standard balance sheet. There could be a problem, however, with some of these other breakouts. Once again, why back to the profit and loss by class? Because we use these items here, these categories, to help group them, and then we did an adjusting entry to allocate them to the subclasses so they can be linked up to the correct profit center. So now what we want to do then is line this up. We can adjust the balance sheet. So these two were broken out. The service D1 and service D2, you'll recall, was breaking out on using our allocation here. The first one, D1, with a 45-55 breakout, and then a 41-59 breakout. So in order to match this out to what's on the balance sheet, we took that amount out of net income here, but the other side of the transaction, the balance sheet side of the transaction, is still on the books here, which is going to be the cash item. So we can reallocate then the cash to be reallocated, and we could reallocate the accounts payable to be reallocated. Now, note also that you might be using the balance sheet for specific things, meaning we only have one checking account possibly maybe we only have one checking account that's applied to all the classes. So maybe I'm not as concerned with the checking account, breaking out the checking account by class. Maybe I'm more concerned with breaking out, say, fixed assets by class and possibly the retained earnings by class. So it's possible that you're not really focusing in on the checking account consideration. You're trying to break out some other items within your class tracking on the balance sheet. But let's see if we can even this out. We're in balance, of course, in total. Now I'd like to break this out. Well, I broke out on the income statement this 1,000 for service 1 on a 45-55 going to the subclasses 45-55. So I'm just going to do a similar journal entry for the balance sheet and see if we can get rid of these unbalanced classes and have everything line up for the balance sheet items. So I'm going to go to the company. Let's do this with a journal entry again. I'm going to go down to make journal entry, and I'm going to say okay. Let's do this as of 12/31/21, and we're going to say checking account, and I'm going to remove it from the checking account, what's currently in there, which is that 1,000. That 1,000's got to go. It's got to go. So it's in there actually as a credit, so we have to debit it because it's a negative. We're overdrawn at the moment, which is not good. And then this is going to be for service D1. I'm going to then put the checking account again. So same item. This is going to be 1,000 times the 0.45. 1,000 times 0.45, which I'm getting from our breakout here. This is rounded. We're taking 0.45. This is actually slightly higher than 0.45, but we're going to break it out with that 45 because of rounding. And then I'm going to say that this is going to be going to the sub account for D1, and then checking, and this is going to be the difference. It's going to go to the sub account for D2, so D2 sub 1. So let's go ahead and save and close that and then check it out. So saving it, closing it, checking it out, saving it, closing it, check. So that now zeroes that out, and we've got our allocation to the sub accounts over here. Let's do the same now for the accounts payable. Now the accounts payable poses a problem because one, you can't really have a journal entry typically that's going to have two accounts payable accounts that will be affected to it. QuickBooks will typically limit that, and I don't want to mess up the vendor information, meaning I don't want to mess up the sub ledger breaking this out by vendor. So what I'd like to do is set up another account which is not a payable account, but it's going to be an other current liability account, which will net out against this one, so we can allocate it out. We can line up our numbers here without messing up basically the sub ledger breaking out by vendor on who we owe. So let's take a look at that. I'm going to go to the same thing. I'm going to go to the company drop down. We're going to say make journal entries, and this is going to be as of 12/31, and then I'm going to call this accounts payable, and then I'm going to say it's an adjusting account, a DJ account, and I'm going to set this up. Now I'm not going to set it up as an accounts payable account because I don't want to be forced to add a vendor to it. That's the point. And I want to be able to have freedom over just recording this adjustment to it. So what I'd like to do is say this is going to be an other current liability type of account, other current liability type of account. And then that's the one. That's what we want. That's it. That's it. And then I'm going to say the amount in it. Let me just check the amount here. The balance sheet. Okay. I went to the balance sheet. We have 1,100 in it. So that's going to be, and that's a credit. So we're going to debit this 1,100. 1,100. And this is going to be going to the service department. And then the other side, I'm going to do the same thing. Accounts payable, adjusting entry. This is going to be the 1,100. 1,100 times the 0.45. And then this is going to then go to the service under D1, service 1. And then accounts payable, adjusting entry, that's going to be the 605. This then going to under the sales D2. That's the one we want. All right, let's save and close that. Let's say save it, close it, checking it out. Save and close and checking out. So there we have it. Now we've netted it out now to 0. So we removed it out without having to mess up, the actual accounts payable accounts. And then we've allocated them out to these sub accounts. So this one is now zeroed out. Let's do the same for the service D2. I need to remove this, allocating it out. This time we're going to use the ratios of the 4159, which is the same ratio we used on the income statement. So let's check that out. We're going to go to the view dropdown. I'm sorry, not the view dropdown. And make journal company dropdown. Make journal entry. Once again, as of 12/31, checking out the checking account. And this is going to be a debit of, let's check it out, 2,000. 2,000, because it's overdrawn. So we're going to make it go to 0 with a 2,000 debit. And then we're going to be putting the other side is going to be going to, or this one's going to be a class of service D2, reducing it, then checking account. Now notice as I do this, I'm hitting the checking account a few times. So these would have to net out. These transactions would need to net out on the bank reconciliation. So you may actually want to have a checking sub account as well, setting up a checking account that would be an adjustment account for an other current asset type of account so that you don't have to check them off when you do the bank reconciliation. But you could check them off when doing the bank reconciliation. It should work that way too. So this is going to be 2,000 times the 0.41. And then this is going to go into, let's see where this goes into this one. And then we have the checking account again. And this is going to go under the sales D2, D2. D2, D2. I really want to say R2 and then D2, D2. But okay, so there we go. Let's go ahead and save it and close it. And okay. So now we've zeroed that one out, and then we're going to do the same thing for the service item here. So we'll pick this one up. This is the accounts payable. So I'm going to do the same thing with this other account that's going to net it out. So I'm going to go back to another journal entry. So we're going to say company drop down, and we're going to make a journal entry. Making a journal entry. And this is going to be the accounts payable adjusting entry, which we're going to credit, or I'm sorry, debit it for the 1300. So 1300, and then this is going to take it out of the service D2, and then accounts payable adjusting entry on the credit 1300 times 0.41, and then this is going to be going to the service D1. So I'm sorry, yeah, service D2, and then this is going to be accounts payable adjusting entry, and this is going to be the sub account under the sales D2. This is service D2 sub. Okay, so then I'm going to say save it and close it. And so then we have that broken out, and it should be broken out over here. So that looks good. And now we have this one last item. This was the unassigned item, something that we put into the to the system as something that hasn't been assigned, and then we used the allocation of this line item, which was the utilities here. This utilities was unassigned, and then we broke it out in accordance with this percentage method. So this percentage method, so we'd have to break that. And what I'm going to do here down here is I'm just going to use these totals. So here's what we have: the 45, the 41, the 300, the 386, the 55, the 59, the 500, and I'm going to use those totals then to break out this 1,000 different that's going to be in the accounts payable. So I'm going to do the same thing. I'm going to use the other accounts payable, and then I'm just going to break it out to reconcile this thing according to what we're out of balance by, which are going to be these line items. So as the last adjusting entry, I'm going to say, okay, let's go to the company dropdown. We're going to say make journal entry. And so this one's going to be for accounts payable again. So I'm going to say accounts payable, adjusting, and this is going to be a debit of the 1,000 was in there, 1,000. And this is going to be for the unclassified or unassigned. And then I'm just going to go into these as they are. So right, I'm going to say this is going to be the 12, 14, and the 10. So I'm going to say, all right, this is going to be accounts payable. I'm going to say this will be for 12 accounts payable. Deleting this for now. This is going to be 14. And then accounts payable. This should be the adjusting entry for the accounts payable. Adjusting. And I'm going to delete this for now. This is going to be the 10. And then I'm going to go back on over balance sheet. Then I got this one, this one, this one. This is the total. So I'm not going to pick that one up. And then I've got the 44, 45, 44, 45, and 40. So I'm going to say, all right, this is going to be accounts payable, adjusting 44, accounts payable, adjusting 45, and accounts payable, adjusting, and this will be the 40. All right, and then I'm just going to pick up the numbers now. So I'm going to delete this, and these are all going to be credits. So the numbers then are lining up to 45, 41, 300. So I'm going to say, all right, 45, 41, 300. And then we've got, I'm skipping the total line, 55, 59, 500. All right. So we'll say 55, 59, and 500. All right. So that should even it out. And it's a little bit, this one was a little bit more complex because of course this breakout that we had here, we assigned to the sales department here. And then the two service departments, and then the two service departments we assigned out once again to the sub accounts. So that's why it'll be easier for us to kind of use the plug in order to populate that one. So I'm going to go ahead and say save and close and see if I did that properly. So we'll say continue, and so there we have it. And so now it looks like everything is in balance now. So we're going to say, all right. That looks good. That looks good. So I don't see any unadjusted balance. So just note that the balance sheet again can be useful to look at if you're doing like fund accounting. It's going to be you're gonna want to you're gonna have to basically do adjustments to the balance sheet. Anything that you adjust that you're moving from class to class on the profit and loss, like we did with reassigning to the classes, could result in some of your classes be out of balance on the balance sheet. That may or may not be of concern with you because you might be using the balance sheet classifications for specific accounts, such as like equipment and whatnot. But if you want to track the equity and whatnot, then you're gonna have to do those adjusting entries over here in a similar fashion as we did, and now we can roll in. We can see our net income should roll in here. So if I take a look at my profit and loss, Profit and loss by class. We got the net income 990, 1394, the 1030, and the net income 990, 1394, the 10300. Profit and loss by class. We've got the 1210, the 2006, 128. So then we've got, right, the 12. Something's a little bit different there. Hold on a sec. Profit and loss by class. We've got the 44 is 1210. The 44, yeah, there it is, 1210, the 2006, and then the 128, and the 128. So it all rolls over, and you can see basically the equity, and that allows you to see kind of, the net value by basically the department that you're looking at. And if you had the net value by location, then that can be a useful tool here, but you just got to be careful in checking that. You can do your basically adjusting entries periodically at the end of the month and do your adjustments to the income statement or profit and loss by class, and similar kind of adjustments up here if necessary to the balance sheet by class. We also have the nice, this way we set it up last time, the last setup with this nice little feature that we can then hit the plus or minus button here, and then we can see these two classes. Now these three classes that we have zeroed out in essence now, we netted these out and they're basically zero. We can remove them, we could filter them out. I could say customize up top, say we want to go to the filters and we want to filter it by class, let's say. Drop down multiple classes. I'd like this one, this one, this one, this one, this one, and this one. I don't want these three because now they're zero. So I've looked at it, I've worked them out. Now they're zero. We're going to say okay and okay. And then we get our class, and then I can collapse these items. And so now we have our nice breakout of those two, basically those two line items, and then the total broken out here. Once again, the totals of the equity section, the 7916, the 9584. If I go to the P&L, I do a similar thing here. I collapse these out, and we got the 7916, the 9584. So we got the 7916 to 9584, and then you could do a similar process here, removing these three lines. We don't need them. Customizing filters. We can go to the classes, and we can say, I want to filter this thing by, I want that one, that one, that one, that one, that one, that one, and that's it. Okay, the other three are zero, and then you can collapse this out, and you can generate some nice reports that can be useful. You can also, of course, export these items to Excel and do any more formatting that would be necessary from there as well.